Hello and welcome everyone. Happy Wednesday. I am Rachel Deschelle, your host for Trading Price Patterns and your new head of technical research and strategy for the Schwab Center for Financial Research. So safe to say there is a lot more technical analysis to come here at Schwab, and especially today as we dive into a bunch of patterns that I have on the watch list for you all. So today, the plan is really going to be talking through a lot of trade ideas, but getting through the mechanics of a lot of different patterns and talking about the different ways to express a bullish or bearish thesis. And I will say we are seeing a lot of bullish patterns out there. So that is what we're going to focus on today. But we have Mike Fairborn in the chat. He is going to answer your questions, comments, requests that I cannot get to today. So please feel free to drop those in our live chat. And please give us both a follow on X. I am Rachel-CS. Mike is Mike Fairborn CS. We post a lot of content about the markets, updates, charts, all the good things. We're also on LinkedIn too, so feel free to follow us there. And please like this video, smash that like button if this class is helpful for you today. And please subscribe to us on Trader Talks at Schwab Coaching. Now, I gave you a little bit of a preview of what we're going to discuss, so let's dive into some of those important disclosures here. So options carry a high level of risk and are not suitable for all investors. This information that we're covering is for general informational and educational purposes only and should not be considered any type of recommendation or advice. And we are going to cover the paper money software application. Keep in mind that there are some major differences between paper money and live. So let's get into our agenda. We're going to skip the announcement today, but we're going to start with our market overview, even find some patterns that may be showing up in the overall market. We are going to review our past trades. We have some of those that have been working out pretty nicely for us. And then we're going to place some new example trades and talk through our trade management as we are looking at a ton of price patterns today. So let's pull up Thinkorswim and start with that market overview. Okay. So if we look at the S&P 500, we can see that we have clearly climbed back above that 50-day moving average this week. We ended the previous week really battling with that quite a bit, and it has shown that it has still been a true level of support for the last few months or so. So we are still holding on to that. We have closed that prior gap down from the previous week. So that is a bullish sign. But guys, look at this pattern that's forming. We have 3 touches on resistance up on the upward trend line. We have 2 touches on support here on the bottom trend line. And it looks like we're running into a little bit of resistance today for this triangle pattern. So if we can eventually see a break here, let's just measure what this is from the highs to the pivot lows of this pattern. We're going to measure that here real quick. So we're going to take that base of that pattern. You can see before that was about 5%. So that's 381 points. If we place this, assuming in this case, since the intermediate term and the long-term trend have remained intact, assuming a breakout here to the upside, where could that possibly put the S&P 500 over the next month or so? So we're looking at the time that it took to complete this, which it's not complete yet, but this is really from the start of June. So it's been less than a month of price action that has really taken shape here in this consolidation, in this kind of like indecision type pattern. And that could place a measured move within the next month. If this does break out within the next couple of days, you may see a pretty sizable move, another 5% and some change there to the upside on the S&P 500, really putting it above 7,900. So for you pattern traders, this is one for you. So remember, we want to wait for confirmation. In this class, we talk about a 2% break above that resistance, which could be even right above this level here. We're going to get real close and measure it here for us. Okay, so we're going to get real close. We're going to say, okay, is this a 2% break? No, not quite. That's about a 1% break of that. But you can also use the rule, hey, maybe you see a couple closes beyond that prior high. That could give you that confirmation to possibly still look to kind of take those longs to the upside and carry that forward. And it gives you that level to manage your risk. So that is looking at the S&P 500. Another one that I think we should kind of point out here, since we talked about this last week, I'm pretty sure, we did have that breakdown through that confluence of support of the 50-day and that horizontal support of this triangle pattern that we saw in the 10-year and 10-year yields here and rates. And we did see a failed pattern there. So we did see a break to the upside. So maybe this is just a fluke, or maybe this is telling us that this could be a failed breakdown in rates and we may be looking for a move higher here. So a couple different things to keep your eye out on here in the short term. Now let's take a look at some of our trades that we have placed. So we were looking at Berkshire B last week. Now we took 4 long call options on this one. We do still have our profit target setting out for us. We do still have some time on this, although we are at a 20% profit and loss. We're up quite a bit today. So let's take a look at the chart on this one. We're just going to look at Berk B. Okay. And if you guys can remember, we were looking at a breakout of this inverse head and shoulders formation. So we were looking at a head and shoulders formation of the breakout, and this gave us that breakout, and we are looking higher, and we have our target in really for 515 because that could break to the upside here. So keep in mind, we are at a profit and loss percentage of about 20%. So this could be a place where we could take half of our chips off the table here and pay for part of our trade and ride the rest of the move to the upside. So what we're going to do is we're going to change these outstanding orders to just 2 contracts, and we are going to take profit on the other 2 at the current price here. So what we're going to do is we're going to take our working orders. We're going to cancel replace. We're just going to bump that up to 2 contracts and firm. And so I actually have to move up this stop a little bit as well. So right now the price of the option is right around 25.65. So we're going to move this up a little bit and just put this to, let's say, $22. So still a couple dollars away from the price, but we're going to move that up and take a look here. Okay. And then we are also going to adjust our upside, our profit. So we are going to cancel replace. If this loads here, we're going to bump that down to 2 contracts, and we're going to hit send there. Okay, so we got that adjusted. That means that we can take half of our chips off the table because a 20% profit is a decent profit. A lot of traders would say that as well. Of course, every trader has their own profit percentages that they are looking for here, but we are pretty safe and sound with 20% in this class. So that's why we're going to just kind of take half of these off the table. So I'm going to adjust this to 2 contracts. I'm going to try to look for the midpoint here in Berkshire B, and I'm going to hit confirm and hit send again here. Okay. There we go. So we took half our chips off the table. We still have the others here. And you could see where that stop order may get triggered at, which would, again, protect our profit. So we're going to just keep our stop there on that one. Now, we did actually have 2 orders that got or 1 order that got filled today. So let's talk about that one. We did take some profits in Visa. If you guys remember last week, We traded this descending channel breakout. We put our stop right here, and we looked to trade a measured move to the upside, which was the width of that channel. So we took our profits today, so made a nice $20 and some change on those shares there. But it looks like Visa is getting pretty close to those all-time highs here. So if this wasn't your profit-taking level, maybe those all-time highs could be that next to a profit-taking level there if you followed that one as well. Okay. So I see a couple questions in the chat. It looks like, Mike, you've kind of covered a few of those. So it looks like we got everything covered there. We're going to keep this rolling with some of our price patterns. Okay, for 3M, we had that short put. We are still awaiting that with about 16 days left till expiration. So we're up on that one. We just need to squeeze the rest of that premium out on the 155. You can see right now the price of the stock is 161. So we're as long as the price of the stock stays above 155, we are keeping that $2.49 premium there. Another one that we looked at last week, now we're up about 8% on this one, but we actually talked about adding to the position last week on a confirmation off of those lows. So we're going to take a look at open. We're seeing some big moves today in open, but if you guys remember, we looked at this close above the high of the low day, and we said, hey, when you see a close above that low pivot candle, that doji candle that we saw here, that could give you your confirmation to add to a position. So we looked at that one last week. We were obviously still in this one. I didn't want to place that trade without you guys. So we just are in this existing position. We're going to ride this all the way up to that resistance zone. Again, maybe take some of our chips off the table there, but ideally we would like to see a nice little breakout in a measured move up to that target right around 723. I did see that there is a survey that's been dropped in the chat. There's only 2 questions on that survey. Me and all the other coaches really read all of those comments, the good, the bad, the ugly, the great. And we try to take all of those into account, into building and modifying things for our future webcasts. So please take about 10 seconds to fill that out. Drop a few comments in there as well. I want to show you guys actually something else that I just noticed with this pattern that we're looking at on the screen. Right where our order is actually taking shape, you have a little double bottom pattern. So that could take you, again, that measured move to the upside there. So we're still riding that one higher for open there. We're going to hold on to that one. We have quite a bit of time. And then we're also looking at Prudential. So we had the 18th of September, 2026, 100 strike call. We are up about 23% on that one. Let's take a look at the chart on Prudential. Okay. I typed in per instead of pru. I guess cat's on the brain, which is funny because I don't even have a cat. I'm a dog person. Okay, so if we look at this one looks pretty compelling, right? Okay, so if you are a pattern trader, what are we seeing here? We could say that this could be a cup and handle, and we're seeing the breakout of that cup and handle today. Or if we want to get real fancy dancy, we could actually say that this is an inverse head and shoulders pattern. Look at that. Look at that, okay? So we have the left shoulder here, we have the big head, we have the right shoulder. This is a measured move from about 92 to 110. That's close to $20 of a move to the upside. We're going to keep holding on to this one here with Prudential there as well. So we're going to keep that one, and that is our long call there for that one. Okay. So we are going to look at some new trades today. We may only place one trade, but the reason why is because I have a massive list. You can see how long this watch list is of price patterns. I have a massive list of price patterns that I want us to talk through, because sometimes we kind of get stuck on, depending the market environment, we get stuck on showing you only a certain set of price patterns, because in a kind of bullish reversal or bullish looking market, you may see a lot more bullish type of patterns. In a bear market, you may see more bearish type patterns, but we're seeing a little bit of a mix of everything, really more on the bullish side in this case, but we're still seeing some channels, some wedges, some triangles and consolidation. So I want to talk through just where we would see confirmation of a break, where we would see those measured moves. And we're going to talk about the volatility environment in some of these stocks and how you could play out that thesis or play out that breakout with a particular trading strategy once you see that. So let's take a look at a few here. So I have a lot in the financial sector because we are seeing some relative strength in the financial sector as of recent. As we've had this weakness in technology, you've seen the rotation in areas like healthcare, industrials, specifically financials. And so seeing a lot of bottom reversal formations really occurring in banks, we're seeing it in a lot of bottom reversals or bullish reversals in consumer finance. So maybe they're smelling out or sniffing out some lower rates here soon. We don't know. The market will tell us. But we're seeing things like compelling setups here. So this is one that we've looked at before. This is Wells Fargo. We're seeing this pretty large possible double bottom pattern really taking shape here. We see the lows crafted in right around 73 or so. We're seeing these recent highs right around 86. And if we take even a closer eye here, we're seeing that we have this triangle pattern taking shape, which could be a possible handle of this right side of the double bottom, a cup and handle. So if we are looking for a break here, this could give us a move quite swiftly to those new highs here. And we are seeing a lower implied volatility percentile here, which could be telling us that now is more of a favorable time to be a buyer of options here. Okay, so that's kind of what we're going to look at. Now, depending on your time frame, whether you want to trade this triangle pattern, whether you want to trade this a longer term pattern here, you could look at a few different things. You could look at a bull call spread. You could look at a long call with a break of resistance. So a few different ways to play that in the options market. Now, I do have a question here. What is your watch list? What is the check mark in your watch list? Is that a scan qualifier? That is a fabulous question. I've actually been getting that question in comment quite a bit on these webcasts. So when you have a watch list, if there is a certain name or stock or whatever asset class, whatever investment is on your watch list, if there's something that kind of stands out to you there, you could just right click on that row, and at the very, very bottom here, you'll see a option that says mark row. And so for me, I mark that row because if those are the trades that I want to focus on for the day, that kind of gives me more of the compelling setups to kind of discuss. So that's just my personal way of marking those out for us here. But you can certainly do that on your own, and then you see that that check mark shows up on the right-hand side, and then the row turns blue there. And I didn't get any of these from a scan, honestly. I just look at a ton of different charts. I look at the Dow Jones, I look at stocks in the S&P 500, because our goal here is to essentially create some high conviction kind of setups here. So I had a question here about what is trading the triangle. Well, let's get into trading the triangle here. So I'm going to jump down to a shorter term time frame here where you can see this triangle a little bit closer. So we're going to look at I'm going to take this off here. We are going to look at a 20-day hourly. Okay, so we're just going to look at this triangle that's been forming on the 20-day hourly. Okay, and so right here, we have seen quite a bit of a rejection on that upper band. Now, for a triangle, you really just need lower highs being put in, and you connect a trend line with those. You just need 2 or more touches on one side of the trend line, 2 or more touches on the lower side of the trend line. So you're typically seeing lower highs, higher lows with a symmetrical triangle like you are seeing here. So this is kind of the setup that we are looking at. You can see the 20-day trend has been to the upside. We are seeing a little bit of consolidation where price is deciding where it wants to go next. But those are kind of the guidelines for that pattern there. And if you are looking to trade these, we know that as traders, we want to await confirmation. We're not using technical analysis to predict price action. We're using it to react to price action. So technical analysis can tell us, with kind of using this triangle, it can tell us the bounds of support and resistance that we're looking at on ways that we could enter into a trade. And so this formation, if we take the lows to the highs of the first pivot points of the triangle, this is going to give us a possible $5 or so move, measured move. And so we can say, okay, if we think we're going to see a breakout to the upside, we're obviously going to wait for a couple closes beyond that level of that break of that trend line. Or we're going to look for a break of those prior highs. That can kind of be a good guideline to kind of give us a piece of confirmation there. So maybe that first hourly close above there, maybe a 2% break, which a lot of the times is what we use in this class. And this could give us a target in the short term, just within the next week and a half or so from when this started taking shape. This could give us a target up to 91. So that's kind of how we get that measured move there. Now, triangles, we know that they can break in either direction. A lot of times these do end up being continuation patterns though. So if you're having this alignment across time frames, we see in the long term, you're seeing this bullish trend here. You're seeing this bottom reversal taking shape. And on the short term, you're also seeing that spin and uptrend. This could be a pretty high probability setup to the upside here. So what we may want to take is we may say, hey, wait until 8630 is broken here, and we want to take a long call. So let's just say that's what we want to do. We want to take a long call if we see a break of 8630. So let's go to our trade tab. We already talked about the implied volatility percentile here, which is 36, so it's relatively low. We can actually see, we've covered this in another class before, but if you're looking at the total volume of calls versus puts, this is probably maybe why you're running into a little bit of resistance here with this triangle, because positioning is a little bit crowded, okay? So if you look at the put call ratio, puts divided by calls for the day, you can see that the put call ratio is less than 50. So on average, your normal put call ratio or average put call ratio is about 65.65, because on average, because the market has natural bullish bias, and because a lot of the times you're seeing that options traders are using long call options to simulate a long stock position, you're typically going to see naturally more call buying, okay? But when you're seeing this level below 50 or below 0.5, this is telling you that you may be at a bullish extreme for Wells Fargo. So this is another reason why we just want to wait for a little bit of confirmation, but the calls are still relatively cheap because volatility is in the bordering the lower third of where volatility has been in the last year. So we know that as options traders, we want to typically buy when there's lower prices. We know that implied volatility is going to raise the premium prices, okay? So what we may be looking to do, we're making, we're still gonna look with a little bit of time. So we're gonna look about 2 months out. So we're gonna find this happy medium. We've seen that this triangle pattern has taken shape over maybe about 2 weeks or so, but we know that there is a longer term formation still at play in the long term that we're seeing here. So this could be a compelling setup in the long term. So we're gonna look about 2 months out from expiration here, about 51 days. And we're just going to buy a call option here. Okay. So we're going to see that this is a pretty tight spread between the bid and the ask. I'm just looking at a delta of about 65. It's telling me that, hey, if our stock moves up $1, our option, if we bought this call, would theoretically move up about 65 cents. It could also tell us that there's about a 65% chance that our option is going to expire in the money there. So I'm just going to hit buy on this one here. And what I'm going to do is we talked about how we're going to wait for a break. So we're going to wait for this to reach $1 higher. And we're going to say, okay, once it gets to 86.30, we're going to place this trade. And so we don't know what the price of the stock is going to be, or the price of the option is going to be at that time. We can certainly use our Theo price mark tool to do that, but we could also just use an offset. So what I'm going to do is I'm going to click on this little gear to the right-hand side. And I'm going to move this over so you guys can see it. And we are going to say when Wells Fargo price is greater than or equal to 86.30, because that's our trigger price. Okay, so this is using the conditional order entry. This is saying wait until the stock reaches that price or higher. And we are going to link this limit order to the current asking price. Okay. And we're going to put it at a 0 offset. And this is because we don't know what the price of the option is going to be when the price of the stock reaches that level. So we're going to say, hey, whatever the current asking price is at the time, since we know that there's a lot of liquidity there, there's a pretty tight spread. So likely we're not going to see a ton of slippage there, but we're going to see we're going to send this order to say if the price of the whatever the price of the option is, the asking price of the option is at that time, we're going to send a limit order at that price when the stock reaches that. Now we're also going to bump this up to 3 contracts because we know that we can create a position size of up to $10,000 in this trade. And so if we bought this option right now, this would be an order of about $1,600 or so dollars, or $1,650 or so is what it estimates for us, which would be the entire premium times 3 or 300 shares, since that's what we're controlling. And so that's going to essentially be our max loss here. Okay, so that's what you're going to see here. Of course, remember, we're not buying at this price. It's going to be whatever the price of the option is at that time. So that's the most we can lose in this trade. The most we can make to the upside is infinite, which is not likely, but we're just going to catch a short, maybe long-term move to the upside, or I should say intermediate term move to the upside if this plays out. Okay. So we also know that we are only risking up to $2,000 in this trade. So not necessarily going to put a stop on this order because this is still within the risk parameters of our account, but that is what we're looking to do there. So I am going to send this order to our price patterns class. And our goal, so short-term goal, we may take a chip off the table when the price of the stock gets to 91, since that's that short-term measured move. But a longer term measured move could take us quite a bit higher, which is where we're going to target for the rest of the contract. So we're going to wait till that order gets filled. We'll go back and put some orders on that. Okay. And let's see. Okay. I'm looking at the chat. Does earnings coming up? Okay, so does earnings coming up make us think about this a little bit differently? So we may see an increase in earnings or an implied volatility leading up to earnings, which could give us another opportunity for profit taking in the coming weeks. So keep in mind, this pattern has only taken shape over the last week and a half or so. So this ideally is a short-term trade. We can extend it a little bit longer, especially after earnings or something like that. but implied volatility is still relatively low. So at this point, we're not really worried in this case. We're still staying within the risk parameters of our account. So everything looks okay here for us. Okay. So that's the one we're going to place. I want to talk through some other ones though. We want to talk through this watch list with the rest of the time that we have left. And we're going to talk about some different trades. Okay. So we've talked about this one in the class as well. So we see that we do have a double bottom possibly forming in Capital One. So with a double bottom pattern, let's just remind ourselves, we have two lows that are kind of crafted out around the same price. And we have these highs that are marked here by a certain level. And that price level looks like it's right around 211.22. So what we're going to essentially do, and I'm going to mark this one on the lower one as well so we can kind of see. What we're essentially going to do is we're going to take the entire depth of this pattern, okay? Entire depth of this pattern, which is roughly $35.50, okay? We're going to take that to a possible breakout point, which you guys got to love this by now, okay? We talk about this every time. This measured move typically aligns with a previous gap or previous resistance level or previous support level, however you are drawing this, okay? So this is another possible compelling setup here in the short term. If you do see that break above 211 here, they do still have earnings coming up in a few weeks, so you do still have time. Implied volatility is still relatively low, but this is what a trader may be looking for, is maybe a 2% break above that 211 to give an entry all the way up towards 248. So you have these levels to manage your risk here. So you could look at a long option in that case. You could look at the long stock, but it's important if you are taking a position before a major event, that's maybe where you want to consider your risk management in that case. Okay, I had a question that said last order is only good for today. No, I'm pretty sure I put that as a good till canceled order. Yeah, that one is a good till canceled order here. Time and force GTC. Okay. I see another comment in the chat. Ivy 34% is not a favorable signal for bullish trend. I want to kind of get your thoughts on why you think that is, because implied volatility is not necessarily bullish or bearish. Okay, so implied volatility tells you that, hey, this is what the market is pricing in for a move of the stock within the next year, and that could be to the upside or to the downside, because we know volatility happens in both directions, okay? You see breakouts to the upside on increases in implied volatility. I'll show you one in a minute here of an example that I have. But we're talking about waiting for confirmation to take a bullish trade and considering what the implied volatility level has shown over the past year. And so what I want to do is I want to put that implied volatility in the chart so you guys can see that, okay? So this is going to be implied volatility. We'll put that down below in the chart so you guys can see this. This is still relatively low to the levels that it's seen in the past year. Frankly, it's still in the lower half. So this could be telling us that could be a more favorable time to be an option buyer in this market. And the trend from these lows has been up. We're looking again, awaiting confirmation for that bullish reversal. But again, volatility, you're going to use it to assess what type of strategy specifically with options that you are looking to employ, or whether it's going to tell you it's more risky to place a trade, especially if you're seeing very high levels of implied volatility. So hopefully that helps out there. So that's one that we're still going to wait on. Now, with the discussion with implied volatility, we're going to look at Upstart Holdings, okay? Some of these, it was almost as if they knew that I was going to cover these today. So Upstart, this one in particular, we are seeing a breakout. If we look here, we are seeing a breakout of this triangle pattern. So you guys know how to do this by now. You can take the lows to the highs, and you can project that from the breakout point. This is about to give us 3 closes outside of that range, which would give a trader confirmation, okay? So that's giving us a move, a measured move to possibly 46. And the reason why we do that is because the market tends to like symmetry. So it tends to like symmetry in price and in time. So if you saw that this accumulation pattern had occurred over a certain depth of pricing, the market may be looking to break out with a level of demand that that is to that degree. Same goes for time. So if this formation took, let's say, 2 months or 3 months to form, it could be taking that amount of time to reach that level. A lot of times, in my experience, I've seen that if price does go to that level, which again is never a guarantee, these patterns are never guarantees. We just use them as guidelines as where to place our exit orders. But you likely a lot of the times you see them go to that level a lot quicker than expected. So not a guarantee, but it tends to happen. Now on this one, I wanted to use this one as an example for that last volatility comment here, because this is kind of a study that you can also look at. I know many of you may use the Bollinger Bands to take a look at when levels of volatility are compressing or expanding. Maybe use it as part of a trend following strategy or even a mean reversion strategy. But this indicator on the lower side here takes the Bollinger Bandwidth. And so it looks at the last 6 months. It sees when the Bollinger Bands have been the tightest that they have ever been. And so typically you see these squeezes happen when price is squeezing as well, because the bulls and the bears are really battling it out and figuring out which way the price is going to essentially pop in. So we did see a very low level of implied volatility here. And this is an indication where you can see the Bollinger Bands are expanding. So you see that volatility expanding. And in this case, that's with price breaking to the upside. So this kind of shows you volatility isn't always a fear mechanism. It more, you see the fear factor index is kind of a name for the VIX in a lot of cases, because obviously it moves inversely from the S&P 500 since it's a synthetic option. But in the case of individual asset volatility, you could see that be bullish or bearish with price kind of breaking out here. So if we wanted to look at a strategy, again, we could look at this is a pretty low volatility still. We wanted to kind of catch that move higher, we could look for a long call option here. So let's just go ahead and place a quick trade here on this one. We're going to look at the 35 strike for about 2 months out from expiration. And we're going to look to place about 3 contracts on this one since it still stays within the risk parameters of our account. Okay. We're going to place a profit taking order on that one in our next class here. So we're going to try for this one today. 35 strike call, and we're going to hit confirm and send this to our price patterns class. But the goal is to take profit at 46. Okay. We have a couple minutes left, so let's talk through some other setups that we are seeing here. This one is kind of on the long term. So this one broke out in a big way over the last week or so, which is when I wanted to cover it with you guys. But you can also see in the long term, this paints a little bit of a compelling setup here. So what would we call this formation? If you guys want to put this in the chat, I'll kind of draw it out here from what we've seen. Okay. We can see that this is indeed a cup and handle. So we have the big cup here all the way down to $4.50. We have the handle getting crapped out. You guys, that is a very large cup and handle pattern. So you know a drill. If you're going to take a measured move from that, that's $316. Now, this pattern took a few years to form, so it could take a few years to see a $316 move to the upside. But momentum is probably the wind in its sails right now, kind of taking it higher in this case. So that's one to definitely look at here. We're going to look at a few other ones. DoorDash. This is one that we have looked at in the past. We're seeing a possible double bottom getting formed right here, and we're seeing that we may see a break above resistance soon. We are kind of in the middle zone of implied volatility. So as a trader, you may say, hey, if we see a break here, this could be a short put vertical. We could look to sell a put option, maybe with a strike around 183, 184 or so. Or we could sell a put there. We could also buy a call in this case too. We don't have any upcoming earnings or anything like that, it looks like. So we could get pretty directional and target a measured move to the upside from this base here that we measured here in DoorDash as well. So that's maybe one that we'll kind of place next week here. No, we'll actually place a stock one now. Okay, so we'll walk through a stock one here. So we're gonna say we're gonna use an OCO bracket. We're gonna use $10,000. And we're gonna say we want to wait for a buy stop. We're going to place this trade when we see a 2% move beyond this resistance. So let's go and measure it out here. 2% move beyond resistance. That's going to give us our confirmation there. Okay, and that's right around 195. Okay, right around 195 or so. So we're going to say wait until the market hits 195. And we're going to place a market order. Now, there are risks with this. This does not guarantee any specific price. This is just saying activate a market order when it hits this price. So if the stock gaps up overnight or something like that, that is where you may see that you may not be filled anywhere near the price. Okay. So where we are targeting to the upside, well, let's look at 237. Okay, 237 to the upside. And then where could our downside stop be? Okay, same risk supply here. Let's look in the shorter term to see if there is a level that we could spot out within this range. Okay. We could look for our stop. Let's just look at this level right here. Okay, so we're using prior highs and support that price seems to be finding a level at here as our stop. Okay, so that's giving us still about $13 in risk here. So we're going to do 182.50. 182.50. Okay. And what does that give us? A favorable risk to reward to the upside to target about a 47 or $42 move to the upside. Okay, so that's still a favorable risk to reward for a trader. Same risk supply with this stop order to the downside. Okay, so we're looking for immediate execution here. We talked through different ways you could trade this using options, but since it looks pretty close to the breakout level, possibly, we're going to get this order in for us for a swing trade here. So we're going to confirm and send, and we are going to send that to our price patterns class. Okay. DoorDash. Okay. Let's see, what other ones? We've talked about failed patterns before. This is kind of a fun one that I wanted to point out to you guys as well. So App11 really formed this head and shoulders pattern where we did have a confirmed breakdown. So we did see quite a move to the downside, but we saw this bullish reversal. We saw that hammer candlestick get put in there. We saw that confirmed move, a close above the high of the low day there, and it's just been a quick move to the upside. So this is kind of one of those scenarios where we say failed patterns or failed moves can kind of turn into fast moves here. So if the pattern does break down beyond that barrier where that old support becomes new resistance and the price recaptures that level within a few days or within a few bars, that could be an indication for you. One, hopefully you have your risk management kind of set in place there to close out any shorts in that case. But also that could be telling you that, hey, there was quite a bit of a demand down here, which could propel this to the upside to the former highs of that formation. So For any traders that caught that one, you're probably still looking at that upside right around 622 there. Okay. Now this webcast is recorded. We are getting to the end of the time. We obviously, when we're talking through these patterns, I can only go so quickly. So we couldn't cover all of these that are on the watch list, but you guys that have been are new to this class and have or maybe have been following this class for quite some time, you know that you can certainly go through this watch list of patterns. Take a look for yourself from what you may see on that watch list of price patterns on multiple time frames that could be forming. Of course, you can always see these patterns on X if you follow me at Rachel-CS. I know Mike Fairborn, he helped us out a ton in the chat. I want to give him a huge shout out. Same with the production folks behind the scenes there that help get this show rolling. Give Mike Fairborn a shout out on X. He's Mike Fairborn CS. Please give this video a thumbs up, smash that like button. It'll help other traders find this content as well. And then please subscribe to us on Trader Talk Schwab Coaching if you haven't already. And please fill out that survey. Lots of asks of you today. But I hope you guys enjoyed the class. And I hope everyone has a happy 4th of July. Happy 250 years to America. Go USA. Have a good one, traders. See you later.